where there's not one evil sort of fat cat villain somewhere that I think is often played out, but it's this small step by step by step.
I fully agree, Simon. So I know a lot of bankers, and not many of them are evil. I know a couple of evil ones,
First up, banks surprised by PPI deadline surge. So the entire banking sector has significantly underestimated the level of PPI claims it would receive around the 29th of August deadline for historic claims. For those unclear or outside the UK, we did some pretty dodgy stuff a few years ago. PPI was a form of insurance intended to help people maintain loan repayments if they fell on hard times. So it was payment protection insurance. It was aggressively marketed by banks in the 1990s and 2000 to help boost profitability. Who knew? But a 2011 court case ended the practice and opened the door for a wave of compensation claims from consumers, and also a ridiculous number of annoying radio ads advertising organisations that would help you get that claim. So in the last week, RBS, CYBG, the Co-op Bank, Barclays and Lloyds have all been forced to take additional charges. HSBC and Santander are the only major banks yet to announce additional PPI costs. And Barclays have become the largest bank to warn that a surge in PPI claims will cost it billions more than expected. They'll have to set aside between 1.2 and 1.6 billion pounds in extra cash to cover claims on this missold insurance. So Ali, do you know about the PPI scandal?
Well, it reminds me of something similar in the Netherlands, actually. I think we were a bit ahead of you there, where people would sell life insurance and all kinds of other, dare I say, crap, when you got your mortgage, and then they would offer the mortgage advisor a huge kickback for him to sell all this stuff you didn't really need. So maybe, if the regulators speak to each other more often, we can prevent the next thing, because probably in the Netherlands it has been invented already.
But isn't that that a necessity in retail banking? Like, it's a difficult area to make business in, as you'll know in Bunq. So surely it's about selling a variety of products that can lead to all kinds of negative possibilities.
Well, if you ask me, the major problem we have in banking is that the natural course of things is not allowed to take its place. So the incumbents are very much being protected by rules and regulations that make it near impossible for new entrants, such as Bunq, not only to enter the market, but also to do things in a fundamental different way. And this causes us to stick literally in the previous century when it comes to business models and the way banks earn money. And so we get these incidents over and over and again, where banks are, kept alive. They're not allowed to go bankrupt like any other company would be. They're tried to forced into a certain paradigm, and then obviously, being commercial entities, they try to make as much profit as possible by, maybe looking at the boundaries of what is allowed, foregoing any ethical.
I don't know that everybody in a bank, Ali, is trying to be unethical. I suspect a lot of these things started out as a good idea for someone somewhere and probably made sense for the first customer it was sold for. But then you get this slippery slope of incentives whereby it becomes really profitable. Oh, wait, we made a lot of money from that thing we upsold. Well, maybe if we incentivize our people to sell more of that, we'll make more profit next year. So you get this sort of domino effect where there's not one evil sort of fat cat villain somewhere that I think is often played out. But it's this small step by step.
I fully agree, Simon. So I know a lot of bankers, and not many of them are evil. I know a couple of evil ones, but you have them in any industry, right? My problem with this is not the bankers, and it's not individual persons. It's the system as a whole that forces things into one direction. I mean, how many of these incidents should we have before we think maybe we should change something fundamentally?
And so what would you change?
I would let banking and the financial sector play its course more along the lines like mobile phones, like water suppliers, and other utilities where there are very clear rules on what is allowed and what is not allowed. But apart from that, commercial companies are allowed to act in a commercial way, and if they make the wrong decisions, they are also allowed to roll over and die.
Okay. Yeah. So Jonas, I mean, you're running a services-based business, something that does payroll. It's obviously something that you can charge for. I think in traditional banking, we've seen people make money from net interest margin and fees and balances, and now there's a new set of players coming along that are providing value-added services that mean that whether it's ad-supported or subscription-based or freemium premium, that there are other ways of earning revenue. What's your business model?
Our business model is a very classic, like SaaS business model. So we charge the company an amount per employee per month. So it's the company that's paying. So it's completely free for employees to receive their salary. We don't try to sell them insurance on the salaries and stuff like that. Very straightforward kind of software sell to a company.
And what happens lower in the stack? Do you have any kind of financial license, or are you relying on other players?
We're relying on other players for now, at least. So we try not to be too try to keep things very simple, and try to keep our focus on building the software and the right product. But eventually, we might move into building out other like financial products on top of payroll, which might need us to be regulated in some way.
Okay, because that fascinates me, the fact that actually you do something that is financial services related and you're building on someone else who has APIs and a license and can be connected. It suddenly creates a different platform. I guess you see a variety of platforms, Kirsty, and with Seedrs and new people coming along. Do you see a variety of business models as well, or are there a certain set that you recognize?
No, we see a variety of different business models. So certainly, we've raised for a bunch of businesses that are sort of in the challenger bank space, and now we're kind of branching into all sorts of variations and elements of that, whether it be dozens that have done the sort of the credit card model, and now this sort of savings account type approach to sort of challenging the old model, and equally. I guess just general financial management type products, ways to, I guess, essentially giving the consumer more power over what they're doing with their money.
Do you see any trends?
I mean, the main trend I think we're seeing really is that putting that power into the consumer, opening up for them. It's the transparency element. It's, riding off the back of this, I guess, distrust that's built up in the old financial institutions, and anything that now is about giving the end consumer visibility, transparency, and the power to make their own investment decisions always flies well with our investors. Yeah.
And so from a Bunq perspective, Ali, do you see yourself making money in that traditional banking space, net interest margin, maturity transformation, lending? Is it in the services, a subscription thing, or affiliate fees for a marketplace? How does it stack up?
Yeah, so I think one of the changes that we made with Bunq, one of the things that is fundamentally different is that we said from day one, even before we started, that we wanted to have our income based on subscription fees. This service model is a very old model, and it is very effective to getting users and customers that are actually happy with your product. And because we pride ourselves into having a product that people love to use, for us this felt very natural. We're not interested in doing the interest spread game. I think traditional incumbent banks are very well equipped to do that. There's nothing wrong with it. It's just that they're already having that piece of the market. Let them have it. I want to have the piece of the market where people care about having a great product.
It's interesting for me that, though, I think that model is yet to be proven, and we're seeing a lot of the challenges that have been around for several years now start to pivot to interest-bearing products. I think what you were saying earlier is, well, that's because of the regulation that sits around it. It's not really allowing us. I'd love to get underneath that a little bit more, because I look at like an Oak North, for instance, who have kind of come at it as a challenger. that's just very, very good at lending. So I hear what you're saying, that lending itself isn't particularly bad, but maybe there's something in the fact that this marketplace model or this other revenue lines or this other business models hasn't been proven. Do you think that is true? And do you think it's a matter of time until it is proven, or is there something else going on?
I think, we have put our trust and belief in this model ever since we started. So we didn't pivot into it. It has been our thing since day one.
Where do you stand with customer numbers and sort of growth at the moment?
Yeah, so the customer numbers thing is the one number we never disclose, because the thing we focus on is to having a product that people love to use. So what we do disclose is like our balance total and stuff like that indicate actual usage. I believe we have a sheet online somewhere where you can check out all the latest numbers, but we're not so much into vanity metrics. But going back to your question, we have put our belief in the system because it allows us to create a product that people really love to use. And I can see from our increase in revenue growth that this will work out for us sooner or later.
And I think that revenue question is a big one. Just to sort of tie this one up a little bit, it's what 50 billion has been paid out in total. This is a massive amount taken out of the UK banking industry. And it seems to be cut, and always seems to be a surprise every single time. And yet, this is a fallout from post-financial crisis. There's still the bad media, the adverse media that sort of comes along with this. And kind of moving away from that gotcha fee into, as Kirsty was saying, that transparent, trustworthy thing seems to be the macro trend here, maybe.
And the trust thing comes up in our second story. See that? That was almost like an artful link.